What's up, everybody? Ricky here, ready to get on with the Monday prep. Obviously, it was a 3-day weekend, so we got a 4-day work week ahead of us. Let me get the tweet out real quick, and I'll be right back with you guys. Should have the tweet out. Let me throw the link in TrueTrader. All right, how's everybody doing? See if I can find. I hid the chat. Where'd the chat go? There it is. What's up, Wesley? And like I was saying, 3-day weekend, so we're doing a Monday prep today. 4-day work week. I'm, this should finally be the last 4-day work week for a few weeks, right? Like, we've just been having 4-day work week, seems like almost every week now. I believe there's a 4-day week in February, but after this we can go back to some full schedules. It gets annoying because you sometimes can't get the momentum going in a 4-day work week that you can get in a 5-day week. Is what it is. Everybody has the same hours to trade, so it's not like it's a disadvantage or an advantage to anybody else. But remember, guys, we do this for a reason, right? You have to have a really strong why, and these 3-day weekends are a great time to spend time away from the screens and chasing and progressing towards whatever your why is. You know, for me personally, it's a lot of just family time and spending time with my kids and stuff. We've actually been having a lot of downpouring rain here in the Southern California area for the last few weeks. The rain actually stopped just briefly enough today when the sun came out, took the kids outside, and everybody was able to stretch their arms and legs, and the kids went and collected snails. It was pretty funny. Hey, what's up, Cruz? Yeah, the clouds were just, it's been, that little brief moment of sunshine today was the first time I think I've seen the sun out here in a week. It's just non-stop rain. Haven't been able to golf. Haven't really been able to do much of anything. Go to the gym and that's it. But it's it's way tougher on the kids than I think it is for me. What's up, Steve? Yep, ready to get it. 2 more minutes, we'll start, guys. Obviously, just going to let a few more minutes go for people to kind of straggle in. We always start at 5 p.m. market time, but I always get the live stream up and running about 5 minutes prior. If you guys can, retweet the tweet I put out or share the link to the live stream on anywhere you have people that follow you or could benefit from this, right? Whether it's Facebook, Instagram, a Discord room that you're part of, wherever you guys have other people that might find value in this. I would love it if you guys could share the link. And like I said, we'll get started here in just a minute. Hopefully everybody's been enjoying their weekend. Some pretty crazy football yesterday, and there's another good game coming up here today. We should finish and wrap this up before that game starts. So perfect time slot to get this done. And it's funny because it's really tough to do the Sunday prep during football season because so many people are just like, no, I'd rather watch the football games than try to get squared away for their work week. Thanks, George. I appreciate that. All right, we'll go ahead and get this started. As always, guys, let me just real quick give a big shout out to our sponsors, because without them, a lot of the stuff wouldn't be possible. Cobra Trading, guys, check them out if you don't have a broker you can trust. There's a link in the description that saves you quite a bit of money, right? I believe it's like 25% off your commissions, and you'll get the first month of your whatever platform you choose for free, which I use DOS. You could use DOS, Sterling, and I believe Cobra may even have their own trading execution platform. But whatever you choose, you'll get the first month free. I can't recommend them enough, guys. And honestly, I trade with all the brokers, right? I've been with almost every single one of them. I have brokers at multiple different ones, but Cobra is the only one that I would ever recommend and put my name on the line with, guys. I love them to death. Spikeet, these guys make a product that allows you to pull historical stock data in order to backtest whether you have a statistical edge or not. And honestly, I used to do this by hand manually, and it took months and months and months to even get a big enough sample size to say that you had a statistical edge or not. Now you can do that within, as little as 10 to 15 minutes if you know how to use the software. If you're just getting acclimated to it, it might take you an hour or two, but you are literally able to take what used to take months and turn it into a one-day project. It's insane. Check them out. There's a link in the description for them as well. ScriptsToTrade, these guys make tools for Thinkorswim or Tradervue or Tradervue, I guess. And honestly, their tools are hands down the best tools I've ever used out there when it comes to indicators and stuff like that. So make sure you check them out. If they don't have something you're looking for, reach out to them, because they will help you. They'll work with you to build whatever it is you can envision. All right, guys. And Tradervue, these guys are who I recommend for tracking your performance metrics. I say it every week, I'll say it again. If you're not tracking your performance metrics, you guys are absolutely playing yourselves. Don't be a fool. Treat this like a business. Be serious about it, guys. Unless for you it's just a hobby and you're just out here trying to scratch a gambling itch, you have to be able to track those things, guys. And there is our first big week of earnings. You guys got Netflix on Thursday, United Airlines after the bell tomorrow. After the closing bell. And this is the first big week. We had the banks on Friday. There's a lot of financial institutions still front loaded the early part of this week. And just like I was just saying, treat this like a business, guys. It's not an excuse to not know who's reporting, because if you get blindsided, you have a position on, you didn't know somebody was reporting earnings this week, that's on you. You got to treat this like a business. You guys should know if you're swinging a position, if those people are reporting this week, right? All right, so that being said, let's get into the disclaimer and we will get this kicked off. Guys, neither TrueTrader, I, or any of our affiliates are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about is a solicitation to buy or sell any stocks. It's simply for entertainment purposes only. All right, guys, here is your economic numbers for the week. Again, here's another one of those things where this is your job to know these things so you don't get blindsided by any of these numbers that are coming out, right? So we got Wednesday, you got retail sales and your PPI. That's a pretty important one, happens pre-market, right? So make sure you also understand the time the numbers come out also makes a big difference. And then Thursday we have the jobless claims, is always a pretty big one too. So that's really the two big ones to be aware of this week. Wednesday and Thursday morning, both pre-market. So now that we got that out of the way, can jump into our broader market analysis. So this is your ES. And basically, this is your weekly chart, guys. We had a big weekly move up into the downwards trend line. Again, I say this every week, but I'll say it again. The trend lines don't really mean much to me other than a visual guide. To me, what's really important is the actual trend itself. Higher highs and higher lows, or lower highs and lower lows. So we are still in a downtrend. This has been a big move up. One thing I would like to see happen, people say, okay, what do you think, Ricky? Is this, are we going to go back into a bull market here? If we get back over December's highs, I think there's an argument to be made, but I don't think it's conclusive, and I don't think it's one of those things where you're just, you can say with certainty. What I would really like to see happen first, for me to have conviction over December's highs, is for us to try to go lower, below this 3788.50 level right here, this level here. Why? Because that is the weekly short continuation trigger to attempt to hold trend, right? We're in a weekly downtrend. In order to hold that downtrend, we need to continue to make these lower highs and then break lows and try to probe lower. If we can do that and not make new lows over December's highs, I have a lot more conviction in that possibility of a reversal. But even then, you still always have to understand that nothing's 100%. You still have to make plans for where you're wrong and how to structure the trade and express it in terms that make sense to you. But again, if we can't come back under 3788.50 on the ES before trading over December's highs, I have a lot less conviction in any sort of reversal. I'd like to see us try to go lower first, because just like we always say on uptrends, right? Well, when we're looking to short something, failed long triggers create the biggest short triggers. Well, same thing on the opposite side is failed short triggers create the most powerful long triggers. And so we need to have that attempt to go lower first in order to have the conviction on the reversal, if it even reverses. Now, if we do take out that I want to make sure I'm saying it right? 3788.50. If we do take that out, you have to understand that is a short continuation trigger on a high time frame, the weekly, and the target would be new lows, right? It would be to come back down here into the 3500 area, and you can't write that off as though it's not going to happen, right? If we do try to hold this trend down, there's no reason to think that we don't come down and test lows. So this is the way we objectively read these things in order to structure the if-then statements, all right? And I just want to always beat that into everyone's heads so that, it's not about being right or wrong. It's about being able to create a trade plan based off an if-then statement, all right? And that's the most important thing to me. So let's jump into the daily here. Still, strong move up. I really do think we're pushing up into levels where it makes sense to find resistance. It doesn't mean we won't go higher. It doesn't mean we won't take out December's highs. But we have to understand that we've had a pretty big move up into some levels. And I think a lot of people are starting to ask, like, I know personally, just because I get a lot of DMs where people are asking me, like, is the bear market over? Is the bear market over? Everybody's so hopeful every time we get moves like this. So if everybody is worried about missing that trade, a lot of times it's not gonna manifest. So I am still thinking that pops anywhere up into these levels, even where we're currently at. It doesn't even have to go higher. Depending on where we open tomorrow, I think we're already in the levels where I'm looking short bias. But you also have to understand that with this big move up that we've made, there's a lot of levels of support below us that we've built over the last few weeks, right? So there's a lot of areas where I'm not going to hesitate at all to put on long trades if we flush hard into those levels, right? And they should. I mean, honestly, when I look at this chart, it's funny because I'm sitting here knowing I'm about to tell you these levels, but I feel like I don't even need to. Like, I feel like you guys should be able to see this very, very easily, right? This should be pretty cut and dry, black and white. Let me jump into a higher intraday time frame, so we can just look at it in hourly, and we'll kind of dissect it. But let's look at the long levels first. Let's say we open flat / gap up. The first level I'm going to be looking at is probably down here in this 3960 area. Below that is going to be 3940s, and below that we're going to say 3915, which is going to be just above the 20-day. Okay. Obviously, there's levels lower. And if we start to come down in those levels, the lower we get, the higher my conviction is on those bounce trades on emotional flushes. Now, keep in mind, when I say that, I'm literally talking about day trades, bounce trades intraday when things flush emotionally. I'm not saying the lower we come, the more likely I am to be long biased for a swing trade or anything like that. Just these bounce trades, right? And I really do like down here in this 3820 area. You can just see how many times that area's been tested. It's kind of, I think that's the previous monthly pivot. We can look by, 3825 was that previous monthly pivot. And you can just see that level's held quite a few times, all the way right down into the 3800s. As far as resistance for the short sides, if we open flat / gap down a little bit, probably be looking at last week's highs, right? Previous week's highs, which is this 4028 area. And just obviously right above that, we're going to have the new annual pivot from just a few weeks ago, right? We're only a few weeks into the new year. 4057 is that pivot. Let's see above that, I'm going to be looking right around that 4100 area, okay? And then above that, we have those December highs, which are going to be extremely critical. Even if we get above December's highs, I think if we make any kind of push up towards those levels, emotionally, the first test is going to be a huge short trade for me personally. Okay. And so those are the levels. For some reason, my television out here is turning on. 1 second, guys. I don't know why. I think my kids are playing with my wife's phone, which is connected to Samsung devices are all like linked together. It's funny. So let's look at the NQ real quick and see if there was anything I wanted to note that's a little bit different than the ES. Let me look at the weekly real quick. Hold on. I think we talked about the fact on the NQ. I think we talked last week about the fact that it had already broke December's lows, right? Early January, I believe it was the first week of January, just ever so slightly, right? If we look at the lows of January, it's 10,751. If you look at December's lows, it is 10,758. So we literally broke it by like 6 points, which is not a lot. I would like to see more of a test lower, but technically, if we're just going to stay objective and based on black and white stuff, this could be a higher low here in January. So if we get above December's highs on the NQ, I think we could make a big push up into the underside of the monthly 20. Again, keep in mind when we talk about these higher time frames, it's not like it's going to happen overnight. These are the types of things where you say, if this happens, right? Like if we break December's highs, then the plan is that it should attempt to retest at least the underside of the monthly 20. But we have to understand that statement, that if-then statement, doesn't have to unfold in the matter of days, hours, minutes, whatever a lot of these like guys that really zone in on these day trading time frames think of. When you're looking at a monthly chart, you have to understand that could be something that plays out over weeks, months. It doesn't have to happen right away. I did just want to quickly rehash that point, though. I think we talked about that last week, the fact that January had just barely pierced through the lows of December. The other thing I think is pretty important to talk about is Bitcoin this week. You can see it's had a big move, had this big rally, and we are, we cleared those really key levels, and we are trading above them. It's the first time we've had this kind of a big push with, volume to go along with it, and also if you have your finger on any sort of social media pulse, you know that everybody's talking about it again, right? So there's a lot of momentum there. And the one thing I want to talk about, we can talk about levels and stuff, which I should. Let's be fair. As far as levels, let me go back to the daily real quick because we already got a lot of these levels marked out. Just going to draw this one straight across to where we're at now. That's still going to be a really key level, that 25K, which is going to be also a psychological level. We may have some resistance where we're in right now, right? We are right up into those levels from November, right? You also have this 22,800. Both these levels could be key. Just being objective, the move that we've seen off these lows has been pretty parabolic. Obviously, it's Bitcoin, so when we say parabolic, I think we should temper it a little bit because we know that this asset class can move pretty crazy, right? We've seen really big moves come from this space. So when I say this is a pretty emotional move, in the backdrop of it being Bitcoin, probably not as crazy as it can get, right? So the main thing I want to talk about with this move is that if I was trying to be long, I wouldn't be doing it up here. I would be being patient to buy any kind of flushes back into levels that it just broke, right? I would like, first levels, you got the 200-day, a retest from above, but I really think that the smart spot's going to be down into this 18.6 area. And I don't know if it gets there or not, but even if it doesn't, if we can't get back down to 18.6, that doesn't mean I'm going to have FOMO and chase it in up here. It just means that if it doesn't come down there, and listen, I don't trade Bitcoin, but if I was trading it, if it doesn't come down to 18.6, guess what? I just miss it. It's okay. You have to understand that if your choice is between missing a trade and having FOMO and just FOMOing into the trade, the correct answer is to miss it, right? If you FOMO in and it works, all you've done is reaffirm a bad behavior, right? Something that eventually might have worked this time, but if you keep doing it, it's going to bite you in the ass, right? If you FOMO in and it doesn't work, now you have regret. Now you lost money you didn't have to lose. If you're patient and you get the trade, it still might fail, but at least you helped ingrain a good trading habit into your psyche, right? Which is to be patient. If you're patient and it works, great, that's even better. If you're patient and you miss the trade, you should still pat yourself on the back for doing the right thing and not just chasing it, right? And at the same time, got to always understand the opposite side of the trade. I know a lot of people are trying to figure out how they can get in, how they can, not miss this. There's also a lot of people that are probably looking to fade this. And so I think there's going to be a great short setup in all the crypto space. But the thing is, you really, really have to remember that this thing, one, it's a theme, right? This is a whole theme, the crypto theme right now, which is going to affect all the equities that are, whether they're miners, holding companies, whatever, right? There's so many different companies out there that they somehow attach their name to the crypto space. They're all going to be affected by this. And when real money and real volume starts pouring in, you don't want to be on the front side trying to find the top. You want to be patient and remember, I mean, we've seen so many themes, right? We've seen the pot theme, we've seen the EV theme, we've seen, you name it. There's been all kinds of these sector moves. But crypto is the one that, if you're going to have a healthy dose of fear and caution, it's this sector, it's this theme. You guys really, really need to exercise a lot of patience if you're trying to find a short setup in this sector. But that was what I really wanted to talk about, was just the fact that this is going to be a theme trade, a sector trade, and you should familiarize yourself with all the things involved in it. I do have a list in here. Where is it? Crypto. There it is. Obviously, there's a lot more to this sector than just what I have here, right? But I have some of the main coins, but what I really care about are from Mara down, right? These are individual equities that follow. And if you start going chart by chart, you'll start seeing they're all going, right? And this isn't something that just happened in the last few days. These things have been going for a week and a half now, okay? And what you'll see is some of them, like look at EBON right here. This one has a bit of a flag kind of developing up here. Some of them are kind of extended, but just understand that like what you think looks extended on some of these, go back in their charts and remember what they really looked like when they really got extended, okay? Because to be honest with you, if this is going to be a big Bitcoin move, these moves that you're seeing here, right here, you could get really hurt if you think that this is overextended, right? So I just want to make sure you guys exercise caution, pick your spots. I'm personally looking for some of these to have some really big moves and give some great short setups. But I'm not going to be, I'm not trying to find a top. I'm not trying to be first one in. I'm not going to be, I'm not going to put myself in danger. I'm not going to risk a big loss on something where I know this could be really early in this move, in this cycle. And at the same time, if I see some names, like if some of these other charts start setting up like this EBON, and granted, keep in mind too, look at the volume, okay? This thing traded 400,000 shares on Friday. That's not a lot of volume. Even on these days when it was trading what looks like big volume, that was only 1 million shares a day. Go back to what this thing was trading when it had big moves, okay? And understand, well, not so, EBON had what, 4 million share days, but some of these other ones, like some of these other names, especially the Riots and the Maras, they trade really, really big volume, okay? And they get really liquid. So they already are, but I think if these start setting up, having pullbacks, and you start seeing higher lows and flags building, you don't have to be scared to day trade these on the long side. If crypto is, especially if crypto like Bitcoin, like those charts we were just looking at, if those things start pulling back to levels that should act as key support levels, you don't have to only be short bias. Like, you could be looking for the long entries too on a lot of these things. And again, I would be much more vocal about the cautionary patience and fearfulness of the short side of this sector than the long side right now. I still think this could be early in this move, and I'd be looking for pullbacks to hold. So that's really, I just want to make sure that I put that out there, that look, this whole sector is starting to go. It's been a while since it has. Things are like literally coming off dead bottoms. If you look at the Maras and the Riots and Coin and all these names, they're coming off dead bottoms. So be cautious how early you try to step in front of those things, and be really like be really cautious when you start to think something's getting extended, because remember that they're coming off bottoms. You could be right for 3 or 4 5-minute candles and get a ripper in your face, and before you know it, you went from unrealized green to like really red, and you're a deer in the headlights. And I think it goes without saying, make sure you have a game plan and a stop loss in mind, and honor your stops, guys. I don't want anybody getting hurt on this kind of stuff. And if you don't feel comfortable trading these things, you don't have to. Remember that too, guys. Like, we're going to get into the prep here in a little bit with the individual ideas, and you'll see there's a lot of ideas that have nothing to do with crypto. All right, so that's the broader market. Let's get into the sector analysis. Let's check out the bar chart real quick. Whoops. I thought I had it already set up to, oh, I do. Right here, yep. All right, so here's your short-term matrix. You had quite a few sectors that were pretty strong, right? Materials, communications, discretionary, which you'll see when we look at it, that's the one we've kind of been talking about, has had that relative weakness. And whatever, you can actually see it in the fact that even though it had a big week, in the last 3 months, it's still red, while everything else has had pretty big moves, right? So that's a good way of kind of seeing that relative weakness. But as always, guys, we still need to go look underneath the hood of all the ETFs, the charts, just to see what the charts are telling us. All right, retail. I still think that first test into that 68 level is going to be a good spot to watch for shorts. It's, I still think pullbacks to levels now that we're above that key level. Still think 63.70 now needs to be looked at as possible support. If that doesn't hold, you still have tons of stuff below it. You got your 50-day, your weekly 20, and your 20, and your monthly pivot, all in that kind of that 62 to 63 area. So definite levels of support to watch. Lots of names have been going in that sector, right? If you look at like Nike and I believe AEO and all of them were starting to, was it ANF? There was a few of them that, I mean, look at this. A lot of these charts look really good, right? So, but if they extend, even if they blow out above 68, watch for failed breakouts, right? If we blow through 68 and then sit back below it and then can't reclaim, there's still probably a possible trade there in that. XLF, remember, banks started last week on Friday. This is if you look at the banks that reported, right, they all have similar candles. That's a pretty damn bullish candle, guys. Have that big old engulfing after the early flush, and then to close on highs like that, and then you go and look at like JPM, and look at that candle in JPM. Like, that's a pretty bullish candle. Bank of America, the whole sector. Plus, they also have lots of financial institutions reporting early in the week, right? So XLF, even though you have levels above you, right, like this 3650 area, and even here, let me drag this one across, this 3730 area, I'm more looking towards watching dips for holds to see if there's long ideas, as opposed to looking for the short setups, right? And we've talked at length about XLF in this sector and the fact that it held this super, super key level. I mean, if we go all the way back to where that level came from, that was an important level to hold. And so far, the author price is telling us that it held, right? Ever since we came down there, had the failed breakdown, and now we're pushing it and putting in higher lows on these higher time frames. Let's look at a monthly too. Yeah, even a monthly that would eventually try to break below December's lows I would still look at that as the possibility of putting in a higher low on the monthly chart and really having a powerful setup looming, right? It wouldn't mean that the setup is there just yet, but it would be looming. We come under December's lows and then eventually break over December's highs. That would be a very, very bullish setup on this monthly chart for XLF. All right, real estate had a big week, right up into levels of resistance though. Again, this is one where not a lot of individual names that I trade from this sector, but if there were, I'd still think that you're going to have quite a bit of resistance even if we get through this level with your annual pivot in that 200-day right there. And not only is it's just a moving average, right? 200-day by itself doesn't necessarily mean a whole lot. But look at, actually, let me undo this. Draw this straight across here. Why do I care about that level? Well, that was where we had this lower high here into the underside of the 20-day, and we broke that level, right? That's going to also line up with the 200-day and that monthly pivot. So anything up into those levels, I would be thinking that's probably the spot to look to get short, if not already where we're at. Okay, we will see though. We'll look back at this next week, and we'll see if we got above this 40 level. If so, did we push into this 4130, 4140 area and reject, or did we not even get above 40 and did we come back in? So we'll see. XLV, again, another one just continuously holding that key 134 level. Even though we had that breakdown below that level, it just reclaimed, right? And what did it do right after it reclaimed? Higher low, and then broke Thursday's highs. Now, granted, it closed kind of right there at them. What I'll do come tomorrow is I'll be very interested in this sector. If this can get back above Friday's highs and start to hold this level. I want to see 135.50 start to hold. If that happens, I think this could make another push. And when we look at XBI, you'll also see there's a reason why I think the biotechs, pharmas might have some tailwinds going with them. Materials, big reclaim. We're right up in the levels. I wouldn't be a buyer up here just because we're so extended. And honestly, should have been saying this about a lot of these names, is even though I'm thinking that there's levels to get short, and even though I like areas for dip buys, where we're currently trading, I'm not a buyer, because it's just like we talked about with like crypto. Like, I'm not trying to FOMO into trades. I want pullbacks. I want to be patient. You always want to wait for the setups to give you guys those asymmetric trades, right? Like, for instance, if I want to buy XRT or individual names, if I buy up here and then it pulls back to 63.70s to retest this level, and I get shook out because I chased it in, and then I have to sit there and watch it go without me, there's nothing worse than that, right? Because you knew better. You went against what you knew. So just make sure you guys understand patience. It's one of those things that is a huge game changer for most retail traders. Because why? Because patience goes against our natural emotional inclinations. Your inclination is like, you see something going higher, you want to get in. You feel like you're going to miss it. We talk about it all the time. It's the fear of missing out. And that is not, that's a huge reason why such a large percentage of traders fail, is because they have these emotions and they know they're not supposed to act on them, but they do. If you can exercise some patience, you're going to see a lot of things change for yourself in your trading. We were at materials and so I'm not a buyer up here, but if we start pulling back to levels and holding, I don't necessarily know I like 81.80s, but back into the 20-day, right? 20-day down to 78.70. That area for me is where I would be a buyer on flushes for this sector. Okay. If it were to extend, if we get back above this 84.50 area, I'd be looking at 88s is where I would be looking to fade. Yeah, I would actually love a big push into 88s for a possible short if it gets there emotionally. Industrials. This one's another one where I think it looks really, really bullish, but I wouldn't be a buyer up here. The 20-day, 50-day, monthly / 99 100 level, that psychological 100, that's the spot, right? But you got to be patient for it. And you got to be able to say, look, if it doesn't pull back there, then okay, I miss a trade. But but chasing up here is going to get you nothing but pain because you just acted on your impulses. All right, utilities. I like the way it rejected here on Thursday. I am hoping to see this thing roll back over, just because we talked about this one a lot too. I just don't want this to end up having that megaphone price action, because if it does, then I'm just hands off, don't want anything to do with it. But I really think that this thing can come under the 69 level and be a huge short setup. But in the meantime, it needs to, where that idea kind of goes out the window is above December's highs, like a lot of other things, right? But it's more so in this sector because of the look that I'm seeing here, where, if we can get under December's lows before we break December's highs, I really think this thing is set up for a big rollover. We will see. And again, we talk about this plenty times, but that is, I have no problem at all being wrong, especially with no money on the table, and just changing my outlook. If we get above December's highs, guess what? The idea that I had here was wrong. It's like no foul, no harm, or no harm, no foul, and just let it do whatever the hell the author wants to do, right? Let me get some smoothie real fast. Hold on. All right, moving on. Staples. Let's look at the daily. This is one, I still think it's in no man's land. Just like, we saw this with XLI, when we were in here. And what did we say? Let it pick a direction and then join trend on pullbacks to levels. This right here in this little coil area where it's getting ready to pick a direction, that's where we're at right now with Staples. I think we said the same thing last week, but it's just kind of coiling. Let it pick a direction. Basically under 73.50, and I'll probably look to short a pop back into resistance, and probably over 76.20s. And I'd especially if it can get a move that shows some conviction, I'd be looking to buy dips back into 75.50. Okay. And discretionary. So this is what we were talking about. Remember, we were looking at this as, look, it had a big week, right? 5.7% up on the week. But where's it at? It's right in the resistance. And I believe I had even gotten an alert last week about it pushing into those levels and to be looking for individual names that are set up. So I still like that idea. I still think levels up in here can be great spots to look for short setups on individual names. If we can get above some of these levels, start holding higher lows, it doesn't mean it's out of the woods. I still think this 147 area is really going to be tough for it, okay? But above certain levels, and then I have to be patient and wait for the next level, right? I don't want to be thinking this 141 area is the spot, and then it gets above it, 142, 143. I don't want to ride it all the way up to 147. I need to take a stop, say I was wrong, and revisit. And I don't want to revisit at 144, 145, and 146 when the level to revisit is 147. So again, there is an area where it's like no man's land, and there's an area where you have clear-cut black and white levels. Don't be trading things in no man's land, guys. Communications, another one had a big week, and another one that's going right into key levels, right? And I think a lot of people will see that we're above this 52 area, this 52.20 area, and think, oh, it's kind of breaking out. But I really think this level that it broke down from back in September, that's the level. It needs to reclaim that and start holding higher lows before I really start thinking that this can go. Now, has this chart changed a lot since we were dogging on it for the last few months? Yes. Granted, we got this higher low. We are pushing. If we continue to hold higher lows and start to build over certain levels, I have no problem changing my opinion on communication sector, because there's a lot of names in that sector that are great traders, right? And I don't have to just stay bearish on them. In fact, a lot of them are starting to look like, we've been talking about Meta for a while. I think we had Meta on the watch list for like 2 weeks ago, 3 weeks ago, a lot. Has everybody else been getting like insane amounts of spam calls lately? I feel like AT&T done slanged my number to a bunch of these call centers. It's killing me. Sorry, guys. But yeah, so communications, even though I'm bearish up into these levels, if we pull back to the 20-day and start holding, I have no problem seeing if we start to hold levels and possibly looking to get long some names, okay? All right, here's XBI. Remember, we talked about this. We finally chose it. Again, one of those ones that was kind of trading in a coil, getting really tight, and we knew that eventually it was going to make a move one way or another. There's no reason to get involved in it until it picks a direction. Dude, seriously, they're calling me again. Let it pick a direction like this has done, and now we're just waiting for dips to buy, right? We're looking for a spot to get long on a pullback. We're not going to chase it. We're not going to FOMO in. We're going to be patient, all right? But again, remember what I said, like XLV keeps holding this 134 level, and if it picks a direction, there's a lot of names in the biotech, pharmaceutical, drug sectors that have nice setups, right? All right, so tech. All right, tech. I still think into the 200-day, we're gonna be finding some resistance. I want it to get extended. I'm not happy that Friday was just this little inside day and it didn't really push. For me personally, even the 200-day might not be extended enough. I'd probably wait for this monthly pivot slash 136 area. Okay, and even above that, then we really do start to get extended. 138 to 138.50. Those are the areas where I'm going to have a lot more conviction, especially if the way it gets there is emotionally, right? You always hear me talk about this. It's not just the levels themselves, but it's how it gets there. I like if I'm trying to reverse something, if I'm trying to fade a move, I want the way it got there to be unsustainable. I want the way it got there to be emotional. I want it to be parabolic if I'm trying to fade it. I want it to be a panic flush if I'm trying to scoop it into these key levels. Because if they're for day trades, bounces and flushes, I'm trying to just take advantage of the fact that the person on the other side of my trade is acting irrationally and emotionally. Just like I told you, you don't want to be the guy FOMOing into a trade. Why? Because then you got someone like me on the other side of your trade taking advantage of the fact that you're emotional. All right. Energy and oil. Actually, one last thing about tech. Tech still looks like there's levels to bounce as well, right? This, not last Friday, not Friday, but the Friday before. Turns out it turned into like a bit of a failed breakdown, and now we pushed. So I think a retest, even like 125 psychological level, even down in this 124.50. Down into those levels could be really good bounce areas and areas to get long positioned. Energy. This one has turned up from those levels that we identified. Like, honestly, we talked about this setup, right? Well, this setup here had already triggered, went to target. Now we're back into the weekly 20. What do? Put in a low, push up, higher low, trigger. So I do expect this to try back to highs. If we can get there emotionally, let me look at it daily. I'll see if that's even going to look emotional. Hold on. Yeah, if we rip, like if we have a huge emotional day in energy up into the 94.50, 95 area, that would be the time where I might look to get short energy names, right? And we talk about this, like I don't like to short names when we're in a bear market and the sector's chart looks like this, right? This is a bull chart. This is a every time frame you look at, this is a beautiful uptrend. So it's really tough to get short when like this is one of the few sectors that's been in an uptrend. You have to pick your spots carefully. So we had this trigger on a higher time frame, a weekly chart. I'm hoping it sparks a big move. Obviously, like I would love to get long as well on emotional flushes back into support. But you pick your spots on the short side very carefully. So like 94.50, if it gets there emotionally, even into 95 and 96, I'm not trying to pick a top, but if I see an emotional move up into those levels and some exhaustion and lower highs, then you do have the ability to probably have some short setups up there. Oil hasn't triggered that same setup quite yet. I think oil still needs to get over this 140 level. We'll see. I think it looks like it's setting up to, especially with the fact that we talked about this breakdown, right? And the fact that it broke that trend line. Again, this is why trend lines don't really mean that much to me. It's more about the trend, right? This really is just turning into a failed breakdown, especially if we get back over 140. So over 140, and I'd be looking for the 20 days, the spot to get long on dips right into that annual pivot. And again, if it gets emotional and really rips that 153.50 to 155 area, would be the spot for me personally to look for things to get extended individual names, right? There's a lot of oil companies that trade enough liquidity and have enough range that if they get parabolic on the chart, I have no problem taking a day trade on the short side on. But you got to pick your spots carefully when you're talking about a bullish chart in a bear market. All right, so that's it on the sector analysis. Let's jump right into the ideas. There's a lot of them this week. There's 15 ideas we're going to go over. Let's start with the long setup. Strong stocks looking for continuation. Okay. The first name on the list is Shopify. I think we had this on the watch. It was either last week or the week before, and the idea was, we wanted to break over this candle here, and I think I even said I want to see it reclaim the 200-day and hold. Well, we got the break above that candle, but it just immediately slammed back down, never closed above the 200-day. Well, guess what? Now we have a pretty convincing close above the 200-day. I'm looking for a flush in 37.40. You see the monthly pivot, the 200-day, and like literally 3 days in a row before we made that big move, that was the high day. So I think any kind of flush into that level is going to give a pretty good bounce spot. So that's one of the long ideas I've got right there on Shop. X, I'm watching for a retest of the breakout area in that monthly pivot, 27.30. I think this alert down here was from a few weeks ago. I really wanted to get involved in this on a dip. It just didn't dip. Now that we're breaking out, now I'm going to have to wait for dips back into these kinds of levels as levels to get long. So yeah, 27.30, 27, somewhere in that area. I want to look for an emotional flush down to those levels for a scoop. All the names in this, like the steel names and like FCX and all those names have had some crazy beautiful setups on their charts. You can actually probably look at a lot of them and find very similar ideas. What really matters is finding ones that have the liquidity in the range, right? X, oops, didn't mean to type C. X, trades liquid enough for a $27 stock, a 1 point range is acceptable. Usually I like things that trade $1.50 ATR. The cheaper the stock is, the lower I'll settle for the ATR. So we're in there with X on a retest around 27. Okay, 27.30 is that monthly pivot, which is, that's probably where I'll be, right around that 27.30 area. Next idea, BBWI was another idea from a few weeks ago, right? We had the idea on watch for this break, and it sent it. But the thing is like just because something works from an original idea from weeks prior, you don't just take it off your watch if it sets up again. And it's setting up again, right? We've had the pullback, the higher low, and so I'm just looking for a break over 47, and it should try to get another leg higher. So over 47, then I want to buy dips and join trend. Yeah, just making sure I remembered my idea correctly. So just for full disclosure, I have a notepad over here where I've written ideas out just so I don't forget the numbers and stuff. But a lot of times I'll look at a chart and I don't have to read my notes. I can look at BBWI and instantly know what that idea was, right? So if you guys see me looking off to the side, that's what I'm reading, all right? Next idea is MRNA. And remember, we talked about XBI having made this move. Okay, so the sector is ready to go. We want to wait for a dip on XBI back into support, but MRNA is like geared up, ready to go. Okay, we have that setup. We talk about this setup all the time: the pullback, the higher low, and then the break. So the trigger's already happened. The trigger was on Friday. Now it's just a matter of getting long on a dip back into a level that is, where we're okay with that risk reward. The target should be up here. Like if you're talking a swing idea, the natural target is these highs up here, 217-ish. Because this is a long continuation trade. So how can something continue without making new highs, right? In order for this to continue higher, it's logical that it must get up to this 217 level and then continue higher, right? So this is how these setups have defined targets. And when you have a defined target and a defined area where you're wrong, you can see the risk reward and the asymmetry in a trade. So it's a matter of where can I put this trade on and be okay with that risk reward, right? So if your target's up now, granted, make sure you understand I'm discussing a swing idea at the moment, but that doesn't mean there's not a day trade here, right? So you'd be wrong on the swing trade down here under this 170, 170, okay? Let's just call it 171, or let's see. Let's just say 170.89 you'd be wrong, okay? You'd be looking to get in on a dip back to probably this 181, or I'm sorry, 183 area. You know, you're getting, look at the risk reward. You're getting almost 3 to 1 on it, okay? And when you're getting that kind of risk reward, you don't got to be right very often. If you can get a better entry than that, or even if you wanted to tighten up your stop, instead of using these lows as your stop, if you wanted to use this intermediate low as your stop, you know, you can really tighten things up, and you don't even have to wait for quite that dip either. But if you use this here as your stop, what you're gonna have undoubtedly run into is times when it stops you out but doesn't break below the full stop, and then it works, right? So, you know, I'm not here to tell you one way's right or one way's wrong. It's more about personal preference, and depending on where you can get in. But I think I wrote down for the day trade too. So 184s is the spot to look for a position on this. But if it holds around that 186.50 area, I would consider taking some there. And if it doesn't work, I would just revisit lower, right? So 186.50. The reason that level, it's obviously the monthly pivot, but it's also going to put you right into this downtrend line, which was what was holding, right? So I wouldn't mind taking some at 186.50, and if it doesn't hold, kick it and revisit it down here at the 184 area. Okay, so that's the idea for me. And when I put these trades on, they start out with a day trade position with the forward knowledge that it could turn into leave a runner on for that swing, for this swing trade, right? So if I buy 186.50 and we push back up into 190, I'm peeling some off. We push it up into these highs right here, Friday's highs, 192, peel some more off, and then leave a runner, right? You've got cushion. The author's telling you you're right, and you can leave a runner on, and with that swing trade intact, from that point forward, you can look to add on dips as long as the author's holding higher lows, as long as you're working up towards those targets. Remember, it's not going to 217 this, you know, Tuesday, Wednesday, or Thursday probably. I don't want to say that because it always could, but more than likely than not, it's going to take a while to get up there, right? So the swing trade has to be thought of as a swing trade and has to be treated as one, but you can enter as a day trade and leave a runner. All right, so that's MRNA, and the last name in this section is OKTA. We talked about, I tweeted it last week. I still think it's kind of setting up, especially after on Thursday, you know, we gapped down, and then 2 days straight we just pushed right back up into that resistance. So basically the idea on this one is over 171.50ish. Let me be exact for you guys. Let me check. 71.70. Over 71.70 is the trigger, and then I'm looking to buy dips back into probably 70. Okay, with basically thinking we're going back 74 to 75 and then possibly higher. This thing may want to fill this gap, may want to come test the underside of the 200-day. I just like the way this thing's setting up, okay? So that's it for the long setups. And one of the things I wanted to show you guys is, like, you know, I run these screeners, like if we look for the oversold reversion setups, very simple screener, right? I can just look at RSI and I have to like start creeping up. When I turn the RSI to 30, BAX is the only one. And when I go to 40, I feel like, you know, one, I'm just really loosening up my parameters just so I can find trades. I'm not trying to do that, right? If there's nothing there, I don't want to manufacture it. And BAX being the only one with an RSI of 30, you pull that chart up and there's just nothing. For me personally, there's no trade. Like, I don't care about this BAX chart. So it's not an idea that I'm going to be looking at all. So nothing in that sector or in that section for the prep. But so then the next section is short setups, and usually what I do is weak stocks looking for continuation, and I run a screener for those as well, where I just, you know, I have a screener right here just says short pops back into the 20-day. I can't tell you the last time I ran this screen and it had 24 results. Like, the fact that there's only 24 results showing right now for this screener is, to me, is a huge flag, right? When you run these screeners every single week, when you run these screeners every single week, you start to become familiarized with like what's normal for results, both on the low end and the high end. You know, sometimes I'll run that same screener. You know, typical, I'll have like 7 or 8 pages of results. Sometimes it's like 17, and I know like that tells me a lot about where we're at in the market. The fact that there's not a lot of stocks that are offering a setup for me personally to short a pop back into the underside of the 20-day on something that's in a downtrend tells you a lot about the market. Okay. Meanwhile, the next section of my prep is the overbought reversion setups. And what's funny is like I'll run that same screener. I'll run this same screener that I run for the oversold reversions. I'll just change the RSI to these high ones, right? And I'll find things that are usually, you know, and dude, trust me, guys, please understand. To me, RSI is not a part of my trade plan. I don't use that RSI. But what it does is it's just an easy way for me to pull charts that have this look, right? But the funniest thing ever was that, you know, when I start going through charts, I had 4 or 5 names that I was going to throw in this section without even running this screener. And that's another huge aha, like, hey, like, where are we at in the market right now, right? So GE's on the list, but it's not the first one I'm going to talk about. Let's go in order. Okay, so the first name on my list is Coin. Now remember, this is part of that crypto crap, right? So like you got to understand that this can really get extended a lot more than it is. All right. I actually wrote that 57 is the first kind of spot I like. You have this breakdown area too from up in here. Kind of just a rough drawing. Okay. But this whole, 61 to 62 area as well, but 57, I know people see it like there's this 54 area. And if you don't understand where that 54 area came from, there was a setup right here where you push up the lower high and then the break. That was a pretty key level, right? That 54 level was what sent this thing tumbling lower, and we haven't retested the underside of it since. But to me, it's too close. So basically 57, what I wrote down is 57 if it gets there parabolically. Like if we get up there emotionally, I'll look to fade Coin. The next level for me is going to be that 62 and even this 64 to 65 area, okay? Keep in mind it's part of that crypto stuff, so don't think it's overbought too early, right? Don't be stepping in front of it trying to pick a top. Let it exhaust out, let it push into these levels that are key levels and let it show you that it's having trouble at those levels. How do you see that? It's pretty simple. You see like either a blowout candle, like an emotional move where you see shorts tapping out and people FOMOing in, and then you get that either a wick or you get a pullback, and then pushes higher start to put in lower highs and start to fail. And then even subsequently after that, long triggers that should take you back to highs start to fail. That shows you that, all right, this is getting exhausted and possibly getting ready to roll back over and give us a trade. Keep in mind every one of these ideas right now that I'm talking about right now are for day trades, guys. All right, next one, AA. This is part of, remember, we looked at X as a possible long. And so it's not that I'm bearish on steel or anything. I actually had a long idea on X, which is same sector, okay? But I just want to see if this thing can blow out up into some levels. 61 is what I wrote down. 61. So obviously we're already flirting with resistance. We're right up into these levels. What I would like to see happen, I know everybody sees these highs the same way I see them, right? You got this high at 58. I would love to see it blow above that. And what I really care about is over here. This right here where we're pushing up, and this was that first failed long trigger that then rolled over, okay? Where did it roll over from? Right here at 61. And lines up with that quarterly pivot, but a retest of that, to me, that is the level where if we can rip up into 61, doesn't even have to be on Tuesday. This could be a Wednesday, Thursday trade. We'll see. But a rip up into 61, and I would really be looking to fade AA. Okay? Amazon, baby. The weekly 20 is what I wrote down. I wrote, you need to look at the weekly chart. Look at this level, okay? This is a very important level, okay? Resistance, resistance, resistance. Get above it, support, support. Get below it, resistance. We're getting emotionally extended up into it, and the weekly 20 is lining up perfect with it. That 102 to 103 area for me, guys, is going to be key. So I'm looking for anything up into 102 to 103 to fade Amazon. Again, day trade, guys. Yes, you could possibly express these trades. Remember, these are my ideas and the way I will trade them. I'm not going to argue with you if you think there's a swing trade short on this. I think you could probably make a cohesive argument for that. All right, guys? All right, the next idea, CAT. I'm watching for this to speed up into 268, okay? This is, I think, all-time highs, if I'm not mistaken, right? Yeah. So this is the kind where you need it to blow out, right? We don't have any resistance levels to go off of. Obviously, these pivots up here these are mathematical formulas based off of previous periods closing, opening, highs, and low prices, right? So that's the first areas where I'll get interested, but the higher the better, right? And I know that sounds cliche, but I really mean it. When you see these kinds of all-time high blow-offs and we get extended, I need to see it blow out. I need to see lower highs set in, give me something to risk against with defined risk. I'm not trying to pick a top, okay? But 267 to 268, all the way to 270, right? Those are the areas that have my interest, all right? All right, UAL. These guys report after the bell after close on Tuesday. What I'm hoping for on this is, you know what? This could actually set up two different ways for me, and I'll still be all over it. I think this move has been overdone. I was in there short on Thursday and Friday, and took, I think, a break-even trade on Thursday, and I took a normalized, I think it was like a half-hour loss or something on Friday. And on Friday, what I saw, let me explain to you guys what I saw. Friday was this push back up into Thursday's levels, and that was what I was kind of trying to fade. And when it rolled over, it couldn't go lower. It literally was just like, I watched it grind higher and just knew people were probably just stuck in this thing, thinking like exactly what I was thinking, right? On the daily chart, like, this is getting overdone. We're in the levels that are clear levels of resistance, and people thinking that it has to come lower. Honestly, if their numbers cause this thing to rip higher, I think you're going to get a lot of people that are kind of emotionally tapping out anywhere into like 54, 55. Like, I'm there. Like, I will definitely be stalking this for that emotional blowout fade. And the other option that can happen, right, is the numbers come out tomorrow after the close, and it loses some of these key levels. And what I'll do is Wednesday morning I'll assess this, and I'll probably look to, if we're gapping down into the 48, 47.50s, who knows, if it's, as long as we're not gapping down to 45, which is, 45 to 46, I feel like we probably missed the move. Okay, at 45, 46, you got to already be locking in if you're short. You can't be getting short right there. But we gap down to like 47.50, 48. I'll probably look to fade any kind of pop back into 49.50. We'll just have to see where we're at after the earnings report comes out and make the plan based on that. But I just want to make sure people have UAL on their watch, because this chart is getting kind of a bit silly up here. I would love to see 55. We'll have to wait and see what happens with the numbers. I'm not going to be trading it. I may trade it like a day trade. I may day trade it tomorrow, but you got to know that the numbers are coming out tomorrow after the bout. So it's not something I'm going to swing into the earnings report, guys. All right, GE, I promise you it would be on this list. GE is on this list. Another one where you don't really see GE make these kinds of moves that often. I don't, listen guys, make sure you understand, even though I'm looking to day trade this as a short, and I might even swing a piece if it closes weak and it's rolling over and breaking levels, doesn't mean that I'm bearish on GE. Doesn't mean that this thing can't pull back, hold levels, and come higher, right? This thing could come and make new all-time highs at some point in the next 3, 4, 5 months. I don't know, but I'm a trader, and when I see a chart like this, I start to salivate. Okay, this is getting really juicy. So the levels for me, I basically just wrote down the higher the better. I'm stalking for those lower highs and the inability to go higher from long triggers, right? So intraday, you have to understand how to spot these long triggers. I like to look for them on lower time frames, because those are when something reverses, right? Like this is extended on the daily chart, right? We're extended from the 20-day. We're extended from like anywhere near where you would see support, okay? If I go into an hourly chart, or let's look at a 2-hour. On a 2-hour chart, we are extended. The 120-minute 20 is down there at 78.60. If this were to rip off the open into the 82s, we're going to be even more extended from it. So you have to understand that these reversals, every single reversal on something that is extended, the only way for this to reverse is to start on the lower time frames and domino effect its way through the time frames, right? So the reason I use a 1-minute chart for an intraday trade is to spot the first signs of those reversals and then using it to cycle through the time frames and watch as it loses the 1-minute trend, as it loses the 5-minute trend, as it loses the 30-minute and the hour and the 100. Like if this thing stops making higher lows on the 120-minute time frame and starts making lower highs, where do you think it's going to go? It's going to have a big retrace because there's not a lot of support back all the way back down to 68 at the moment, right? Which is where your daily 20 is. So understand how to use your time frames, guys. And like, I know a lot of people talk a lot of shit on people watching 1-minute charts, but the reason somebody would watch a 1-minute chart is to spot that long trigger that fails to make new highs, because that's that first aha, hey, the author might be saying that this is going to roll back over, and it doesn't mean that we don't head higher on a 5-minute time frame or on a 20-minute or a 30-minute or an hourly. But you know, your job is, if you're trying to be a mean reversion trader, your job is to identify the turn and be in the trade from as close to that turn as possible, because that turn, where it turns from, that's your risk. That's your level of risk. And the further you get from it, the less asymmetric the trade is, the more risk you have to carry in order to have the same trade, right? So you guys have to understand how that works. And the last idea in here is WYNN. 107.50 on a parabolic pop has me excited. Boo, boo, boo. 107.50. Why? That was where that high was put in back here. Let's see if I can, there we go. And it's also, you got that monthly pivot right up in there, and we're kind of blowing out over these levels right here, right? So I think we could get that squeeze up into those levels, and if we go from 100 to 107.50 on WYNN, that's going to be extended, right? Intraday and on the daily. So another one of those ones where I'm starting to get excited about it. I'm not there yet. This move right now, even though it looks really extended, not a lot of this is gaps, right? Like here on last Monday, that was a gap. And actually, it was a really ugly candle. The fact that it went higher after that candle probably has a lot of people trapped if they were stubborn and swinging short. So we'll see. I'd like to see a gap up on it and a push just to get that, you know, I want it to blow everyone out, because once everyone else blows out, there's not a lot of other people in there to fight with, okay? All right, so there's two other ideas I want to talk about, which are kind of swing ideas, which you have to understand. Actually, there's three more ideas. I'm sorry. And so let me just pull up the charts real quick and we can talk about them. FND, so let me read what I wrote down about it. Just thinking this daily chart is screaming lower near term. Why? Because of this candle, right? Friday's candle. I honestly, if this was more liquid, I would day trade this. But because it's only trading, you know, most days it doesn't trade 2 million shares a day, right? Mostly it's like right in that 1.5 million and 1.75 million shares per day. I'm not a fan of low liquidity, but this is, to me, screaming it's coming back down lower, just off Friday's candle. Okay, so the whole idea here is I'm going to look to short a pop back into 87 with risk over Friday's highs, and I'm looking to swing it so that I can have, you know, so I can still express the trade where the risk reward's still asymmetric, but I'm not going to get in there with so much size that it's like I'll feel stuck. Because if you look at like if you look at some of these lower time frame charts here, look at these candles, right? You see like all the gaps on a 1 minute candle here, or on the 1 minute chart. It's super illiquid, right? In the morning, you'll see it's a bit more liquid, but even then, it's not a lot. So basically, yeah, I'm just looking for this thing hopefully we open flat to gap down a little bit or something. I don't want to gap up. I don't want to open 86.50s or anything. I kind of want to open right in this 85.50 area and a big pop off the open right in the 87.30s to get short and swing it with very, very clear defined risk. Okay, so that's the idea on FND. And again, the reason I say it's more of a swing is just because it's low liquidity compared to what I usually day trade. All right, so these next two ideas are possible big setups on higher time frames. And I, again, remember what we said earlier about higher time frames. You don't have to expect it to just play out right away. It's not like today, tomorrow, next week. It's over the course of a few weeks, this can really develop into a big setup. So Square is the first one I want to talk about. And remember, this is also going to probably be moving in sympathy with Bitcoin and coin and all the crypto stuff, okay? So I think we had this on the watch a few weeks ago or something, right? We were kind of looking for a flush to get long for basically this breakout that's kind of happening. I still like the chart. I think the chart's really set up pretty nicely. But the real setup is on these higher time frames, okay? So on the weekly chart, we've had, let me see if I'll go ahead and annotate the chart for you guys right here. All right, so this right here, when we broke below these lows here, below 59.60s, this was the short continuation trigger. This was what should take us lower. When that fails, that's where you get the failed short continuation, which turns into a possible really powerful long trigger. Where does that trade fail at? The trade fails above these highs here, above November's highs. So that's the real trigger. And if you look at a monthly chart, you'll see it. Actually, you won't. And this is where understanding these setups is really important, because we've talked about the fact that you can use the higher time frame as kind of like a cheat sheet, right? Where you'd like to see a higher low here on the monthly. Well, you won't see it on the monthly because you have to know what you're looking for on the weekly, but it's there, all right? So over 75.77 is the big trigger. Again, when you start to get closer into the lower time frames, you realize, like, I'm not a buyer above that level at all until it retraces and pulls back into key levels. But you have to have it on your watch ahead of time so you can make these plans, right? So over 75, 77 is the trigger. If we trigger, I'm looking for pullbacks probably into 72s to get long for a swing trade on Square. And you have to understand that this is bigger picture, higher time frame, and you really have to understand what we're talking about in terms of risk and reward, because this is a swing trade. Whoops, I think I need this one here. And basically the way it would be structured is like this. You're not wrong till you make new lows, and your target's way up here at the monthly 20. I don't know. Keep in mind, guys, that these setups are going to take, even if we trigger, we push over 75, 77, it could take weeks upon weeks, possibly months, to finally push up into the underside of the monthly 20. And meanwhile, that whole time, the monthly 20, every time you get a new monthly candle, this monthly 20 is going to move lower and lower and lower. Okay, so to assume that it's going to just go straight up here and attack that is a lie, right? You have to understand that you're probably looking way lower for your target, but remember, we're looking at trying to get involved around 72 if we trigger above 75, 77. So this is more of like a realistic risk reward type look to this trade, but you're looking at about a 72 entry with maybe a 125 target and a stop down here under 50. So I know this isn't everybody's cup of tea, right? Not a lot of people like to put on trades where you're risking 20 points, but you have to zoom out and you have to understand the setups and you have to understand the targets and you have to understand that the trade, even though it's risking 20 points, is still asymmetrical. Okay. Now, the same setup is setting up on Dash. So both are on my watch. Both have that short continuation trigger that if we now break above 65, let me give you the exact price, over 65.49, would be the long trigger on Dash for the same setup. Now Dash actually has the higher low on the monthly chart, so you can see it a little more clear, right? And again, you have to understand these setups and the way they're structured in terms of where you're wrong and where an actual target's going to be. Let's see, if even if it triggers, I wouldn't want to be a buyer until 57. I would like a pullback to 57, and you're probably looking somewhere in this 100 area, right, for your target. So again, asymmetric. Not a lot of people though want to put on this trade where they're risking that kind of drawdown, but if you understand the setup itself and why it's powerful, right? Like if you're in here looking at this, you're going, look, people probably got short this thinking it's going to continue its downtrend and it's going to lose 41s, right? So they're short from this trigger. Well, when that trigger fails, that's where you get that powerful long trigger on the other side of it. So just want to put that on people's watches. Square and Dash both have looming setups. They're not there yet. Things have to happen. They're on higher time frames, so they take a while to develop. But I did want to throw them out there. Let's see if there's some questions. I feel like I went really long this week, and I apologize, guys. Steve says, if you have time later, anything you can suggest helping on risk-reward strategies would be great. I'm not 100% sure what you mean by that. Risk reward is very, very dependent on what the strategy you're trading is. And you'll hear me talk a lot about trade asymmetry, right? Like how asymmetric is a trade? Why does that matter? Well, because the more asymmetric it is, the less often you have to be right. But there's some systems, there's some strategies out there that the normal expectation of that setup is to be right 60, 70, 80% of the time. And guess what? If you're right, if your system is legitimately batting 70%, you can take one-to-one trades all day long. If you're being honest with yourself and your system actually has that profile, that win rate. The problem people get into is they think their system, like a lot of times, like I talked about earlier, is tracking your performance metrics. People will look at their performance metrics and say, look, I have an 80% win rate, so I can take these one-to-one trades. Well, what you're not understanding is maybe you don't really have an 80% win rate. Maybe you're adding to losing trades and getting out for a profit when you should have had a loss. Or, maybe you're taking your profits really early and not letting them go all the way to the target, but your losing trades are going all the way to their stop losses. And you have to understand that you have to be brutally honest with yourself when you're looking at your performance metrics to understand, do the numbers that you're looking at actually correlate to your actual system? So don't just look at your performance metrics and say, oh, I have an 80% win rate, I can take one-to-one trades. Make sure you're really being honest with yourself about what your win rate should be. Are you taking trades where you didn't stop out where you should and they turn into a winner? Because that's going to really like skew your results. You're going to think you have a win rate that's not really representative of what your win rate should be, and that can get you in big trouble because there could be a trade where you add to a loser and typically it would bail you out because it'll go into profit, but this is the one, remember, it can always happen. It could be that one where it doesn't come back and you keep adding and it turns into one of those humongous losses, right? Guys, there are so many traders out there. Remember, 90% of traders fail, right? I would say a large percentage of those traders have 60, 70, 75% win rates. How on earth do so many people have a situation where they're right more often than they're wrong, but they can't make money? It's all because of the fact that they're not letting their winners outweigh their losers, because they're either taking profits too early or they're adding to losers and their losses are huge. So make sure you understand that risk reward's not everything, right? You can trade one-to-one trades if the system or the setup is going to work with that risk, with that win rate, right? So if you have a higher win rate for a setup, then you don't have to worry about getting 2-to-1 or 3-to-1. But it is way easier. It's way easier to just look for asymmetric trades and be at peace with being wrong 60% of the time, right? Like the system I track for, over a year now that I traded every single day is like a 45% win rate, and I'm fine with that. Dan says, hey Ricky, on that note, do you think all meme BS from last week is done? No, and in fact, I hope it's not. We'll see. We saw BBWI. BBWI. I hope this one gets a pop back into some levels. I think, we may be backside here, but there's a lot of names that we're starting to go to, right? So you never know. These things this was the first day for SDC, right? Could get a gap up, could get legs. There's a lot of other names too, right? So I think I have do I have an ETF or not ETF, a watch list meme stonks. Yeah, so I have, a lot of them all in here. I can just go through them and, we can, a lot of them haven't gone yet, or maybe they don't. Maybe we just cycle through new names and Reddit has a bunch of new things that they start pointing out and everybody gets behind. But, they're easy to spot. It's easy to see like all that momentum and that hype coming into these names. So as they pop up throughout the week, if that happens, it's really easy to spot them and start to track them and possibly see setups. So I hope the more the merrier. Jordan says Tesla is still just waiting for 125 for a move upside or 115 to the downside. Well, we're almost up into the 20-day. You almost have to think that was the move into the 20-day. What I'd like to see now is for this attempt to try to go lower and fail, and then possibly give us that setup for over that 126 level. One of those ones that I didn't put it on the list this week because it's there's a lot of things, a lot of moving parts that have to fall into place first before there's a setup. But we'll see. Yogi, what's up, Yogi? He says, Idea is not for everyone. UNH long 482. Man, the only thing I can think of when I look, as soon as I pulled the UNH chart, Yogi, is that candle on Friday was really ugly. I don't know what happened, if there was news or something, but it gave that whole move back. Like, it had a big move and it gave the whole thing back, lost 500. I don't know, man. Again, make sure you guys understand, Yogi's a good friend of mine. He's a great trader, and I have full confidence that he can put a trade on, know when he's wrong, manage his risk, and execute. And I know it doesn't bother him when I give my opinion on something, but I just think that big push up on Friday that gave the move back is pretty ugly. I don't know what happened there. But for that reason, I probably would not be looking to touch UNH. Let me look at the other ideas, though. AZPN, long 198. Oh, man, there's... Come on, Yogi. This doesn't even trade 300,000 shares per day. What's the... 10-day volume's 140K. I can't touch that. I think he's just putting these ideas in there to give me a rile. CPRS 2050. Is that... Maybe you meant CPRX, or... Yeah, I think he means CPRX. Because that is one that I know I've been looking at. This thing was on IBD's top 50 this week, and it's beautiful trend. If this is the one he's talking about, I think it's probably what he means. But yeah, I like that level on CPRX. And the other one he said was DECK long 412. That's another one that's too thin for me. But yeah, I see the level. I would even be thinking 400, right? Like, and just like, even though I think like the volume's too low for me, I can still look at a chart and tell you guys like, yo, like honestly for me, a retest of that would be what I'd look for. And even if it got below that, the 20-day would be next, which lines up with where you had that higher low here on Monday, right? Last Monday. No, was that 2 Mondays ago? Yeah, the 9th. But that 394 area, 393. JC says comms long. Probably not. I don't, guys, if you guys don't understand, I don't trade these sub-dollar stocks. There's nothing here. Even if this goes, right? Even if this rips and you make money, I just don't see it as a repeatable thing that can be your edge. I know a lot of these really cheap stocks have been just having these big moves lately. I know people were watching this one when they were watching COSM, right? The only reason COSM was something I would have traded was because the reverse split put the price up into levels where I would care about it, right? But I don't trade these cheapies, guys, like sub-dollar stocks. Dan's saying that gold and silver are still in a nice uptrend. Wait for a pullback, question mark. I mean, for me, yeah, like for sure, like when you look at gold, this is exactly like, the Bitcoin move where it's like, could you buy it here and have it go higher? Yes, but I think you'd be getting rewarded for bad trading habits, right? Just chasing. The areas like I'd be looking for is the 20-day, that 171 area, and again, and even this 168 area. And again, it would be one of those things where like it takes discipline and patience, and maybe you miss the trade, but at least you're building good habits, right? Being patient and not acting on impulses. All right, guys, I don't see any other questions. I'm gonna go ahead and wrap it up. I'm not sure how long this one went. It feels like it was a bit long. And as always, I hope you guys found value in it. If you don't understand a lot of the concepts I talk about, make sure you check us out at truetrader.net. Use the coupon code, I think YouTube in all caps, you get a discount. We have a 5-day trial if you want to just come see what we're about. Hopefully you guys enjoyed your 3-day weekend. You still have the rest of today. And if you don't want to come over to True Trader, I'll see you guys in the market tomorrow.